Good morning.
Hey, Kristy-Leigh, how are you?
Doing good.
Good. Am I calling you by the correct name? Is it Kristy-Leigh, Kristy-Leigh? Oh, lost your audio.
2 seconds. Let me just fix my audio.
Yep.
Just over to the AirPods.
Yeah, no worries. I got you back now.
There we go. How is that sounding?
Perfect. Thank you. I was just making sure that Kristy-Leigh is correct.
Yep, it is. It is
Awesome.
indeed.
All right, so let's jump into it because I know you have a hard stop. First of all, thank you for doing this. The whole premise of going parabolic is like a due diligence session where I try to find people who know infinitely more about a subject than I do, and we kind of go down the rabbit hole a bit so as to allow these videos to be kind of resources to go back to and listen to over and over again. It's not kind of like pumping projects or shilling stuff. So, from my perspective, I've been a fan and someone who's watched you participate in group sessions, talking about mining, economics, social impact. So I've really appreciated the stuff you've done. Plus, I'll let you talk about your background, but you've worked on some of like the coolest projects in the space too. So let me just let you spend a moment to tell everyone who you are, and then I'd love to go into like mining 101. What is it?
Okay.
Why do people do it? What's the tech behind it? Why is it necessary in this crypto space? And really just take us through that evolution. If you could stay kind of high level, because I know you can get into the weeds, that would be awesome.
And for going parabolic, do we want to, what's our usual audience? Is it Bitcoiners? Is it all kinds?
It's Bitcoiners, it's bankers, it's
Got it.
It's people who are exploring the periphery of the space. So and just kind of nerds.
Good.
Cool.
Good
So
to
why don't you tell me a little bit about yourself?
Yeah. I'm always really bad at introductions. So my name is Kristy-Leigh Minehan, aka Ogata Girl. And I have made a career not only out of cryptocurrency, but a lot of optimization, which ties nicely into Bitcoin mining. So mining is, the one industry where if you're optimizing things, you get immediate feedback. Meaning, most engineers, when they write some code, they have to wait months for it to actually give them gratification. They have to go through the market testing cycle until they get any kind of revenue. Or if it's for a day job, it's often years before they see that go to market.
Yep.
With mining, as a developer, you can immediately start making tweaks and you can see an increase in your revenue in real time. That is game changing for what it does to your brain. And it's game changing for the psychology around writing better code. And yeah, I've worked on a lot of projects in the last 10 years. I think I'm most notable for my role as CTO at Core Scientific, North America's largest mining and blockchain infrastructure company. Also worked for Genesis Mining, the world's largest hash power provider. And for my day job, I work with cameras now, actually, as a complete pivot away from crypto, and do a bit of expert witness stuff in blockchain law, and serve as an independent consultant for around 50 different mining farms around the globe.
Wow. Okay. So stepping back, what did you do at Genesis? And just for people who don't know, can you give us a little background on Genesis Mining?
Yeah, so Genesis Mining is one of the world's leading cloud mining providers. And what that means is essentially Genesis Mining goes out, buys all the hardware, runs the machines, builds out all of the infrastructure, and then they sell contracts, mining contracts, where you can lease that machine for 1 month, 2 months, up to 12 months, and you get the Bitcoin mining rewards from it. And back in the heydays of mining, so, between, I would say, 2010 and 2013, this was one of the biggest resources to get Bitcoin because the machines were very hard to get. They were in very, very short supply. And the infrastructure we see today for cryptocurrency mining didn't exist. So people were deploying these ASICs in really traditional, server and rack data centers, and it was a nightmare to maintain. So GM cut all of the hassle out of that.
Got it. And just take me through what was the hassle about deploying mining rigs in traditional data centers? I would have expected them to have power, to have AC and cooling. Was it that you were just paying up for the space, or what was the problem?
Not just paying up, the cooling is inefficient for the the form factor of ASIC devices. So Bitmain and Canaan really pioneered what we call the shoebox style miner, which is the rectangle everyone is really familiar with, that has one or two fans on the front and the back side. And what essentially it does is it acts as a pipe or a wind tunnel and forces air through the rig at very, very high pressure. Now, traditional servers usually do not have that. They're much lower pressure, and they're designed to sit, 48 units within one rack, and they never reach power consumption over a certain threshold. So usually, one server rig of, 12 to 16 GPUs will consume max 1,500 to 2,400 watts, whereas one Bitcoin device consumes up to 3,300 watts.
Right.
Huge increase in power. So part of it was, the cooling wasn't correct. Density really wasn't there. It wasn't a case of the price back then, because everyone was really making bank regardless of whether or not you deployed. But that cooling issue led to a lot of rigs going down, so you had to have a lot of maintenance crew on site triaging miners.
Yep.
Until the very first, I would say, rack style design was pioneered partly, I saw it partly pop up in China. I saw it pop up in, I believe it was Sweden by KNC Miner. It was popping up everywhere. And for those who don't know what that rack style design is, it's essentially really old school, I would say some of the racks you can get for storage from Lowe's,
Yep.
and they just stack the miners right side by side.
Sort of
Really
like the
high
shelf
density.
behind you. It would be
Yes.
where you just put ASIC miners or GPU miners right next to each other and build
Correct.
columns of fresh air and hot air, and you just, as fast as you can, move the hot air out.
Correct. And it's dirt cheap, and it's really effective, and it works really well.
Right, versus a tier 1 or tier 2 data center where you're pumping in, tens of tons of air conditioning, and you're just driving your power utilization up because of this, what you're saying, unnecessary cooling.
Yes. So the really great thing with Bitcoin mining is the ASICs themselves can essentially push all of the air out because of the pressure they generate. So you no longer need external aid to help cool the system. Now that doesn't work for, every setup around the world. If you're going to deploy equipment in places like Kazakhstan or Dubai, you're going to need external help simply because of the temperatures or the humidity. But yeah, the ASICs, I truly believe now, after having been in the HPC world for the last 4 years, I truly believe that ASICs are the most efficient form of cooling and one of the most efficient designs for computing in general.
It's awesome.
Just that tube design.
And I told myself before we got into this discussion, I'm going to try my best to pull you up from the details that I know you can exist in. So let's step back and tell me, what is mining, and explain to me, why is it fundamental? And let's just start with Bitcoin. Why is mining and Bitcoin and blockchain kind of one thing?
Mm-hmm. So if you look online, the description you get of mining is that miners are helping process transactions and verifying the blockchain. And that definition is kind of correct today, except there's a few other participants, such as pools, that have come into the equation. So miners do provide the necessary computation to process transactions. And that, they send their processing power to a pool, which crafts blocks for them. And there's a few issues with that today in the politics of Bitcoin that we can get into later. And so why that is so critical is, number one, you can't have, progression in your blockchain without miners. And you need steady, repeated transaction processing to get steady, repeated speed. And the other piece is it ensures that there is validity in the blockchain. Now, that proof of work piece is also really critical to integrity. So by definition, proof of work is expending energy, a form of work, to ensure that you're, a benevolent actor. And it's meant to be that if you, how to say this, sorry. It's meant to be that, if you are a malicious actor, you have to spend a lot of money and a lot of resources out of pocket in order to change the blockchain or to just be a malicious party. And so by having a CapEx component, so your CapEx is, for those who don't know, things like your actual hardware itself and the actual, physical goods, having the OpEx component, which is an ongoing cost, always your electricity, that ensures that your costs are really high versus the reward that you get, which
Yeah, I love it.
ensures that.
Yeah, and I don't mean to break
incentivized.
your train of thought. If you'll allow me to just jump in, and then we'll try
Yep.
to go back. So CapEx, capital expenses; OpEx, operational expenses. To mine crypto, let's just stay with Bitcoin for right now. You've got to buy machines. You've got to buy the racks. You've got to get interconnects. If you're going to mine, you've got to pay for power. You probably need some IT support. And then these things break. So you've got to have some repair and maintenance stuff going on. And all of that costs real money. So when people say Bitcoin is nothing, it's not backed by anything, that's illogical and it's wrong.
Correct. And
Very
so
good.
in the traditional finance system, right, we're backed by gold. It
Yep.
just so happens in Bitcoin, we're backed by mathematics and computing power.
Yeah,
And
or US dollars are backed by faith, faith in the US government,
yes.
right? So it's not even backed by gold anymore. So why would anyone spend millions, tens of millions, or hundreds of millions of dollars to put in all this infrastructure to mine Bitcoin? Why?
Well, it can be a really good business.
How? How do I get paid? What's going on in this magic world of mining?
So so when you contribute computing power, you get a percentage, or if you are solo mining, meaning you're not using a pool, you are the pool yourself, you can get the block reward. And that can be a very, very viable business because it is repeated revenue generation. And this is what is driving everyone crazy. So all around the world, folks are just deploying this mining infrastructure because, it's repeated revenue. They can generate up to millions of dollars per month or higher.
Kristy-Leigh, is there a sales process? Once I turn the machines on, do I then have to send out a sales team to try to sell the computational power, the hash? I mean, how do you get plugged in? It just happens automatically?
It just happens. You literally connect your miner. You have to set up a wallet, so where your funds are going to go. But once you've plugged in the wallet and you've directed your machine to the pool, that's it. The crypto network is permissionless. So.
And the reward, again, I know there are lots of different chains you can mine, and there are different systems beyond proof of work you can mine. But let's again stick with Bitcoin just for simplicity. How do the rewards come? How do I drive revenue? And is the revenue predictable? Can I model it out? Like if I sell 10 pizzas and I charge X amount for pizzas, I can predict how my daily revenue is. Can you do the same thing with Bitcoin?
You can. You just have to make sure that you account for the volatility. So just like with traditional stocks, you need to model out disaster events such as Bitcoin price, going all the way down to zero, difficulty increases, machine increases, etc. So really advanced mining farms now, I shouldn't even say advanced, most mining farms will have dedicated FP&A models, modeling out all these assumptions per month and then per year. So
Yep.
that is something you definitely can do. It's often different to the traditional, the traditional cloud computing business where you're essentially modeling out selling computing power. It can be very bursty, or it can be, and you have to model for those assumptions. So
Yeah.
Bitcoin's very much the same.
And I don't want to get off topic because I want to stay in this progression, but you've used the term cloud mining. That's different. It's another revenue
Hmm.
option for people who've already invested in the infrastructure of mining, right? They're not
Kind of.
necessarily mining for themselves. They're putting contracts out on their equipment potentially and
Kind of.
sharing. So explain that to me.
So no one does that anymore today, solely because cloud mining is considered a security in a lot of places within the US.
Yeah, the SEC
So
came down pretty hard. I don't know if you were at Genesis, but I think they were
I
one
was
of
not.
the. I don't.
Yeah.
I think they were one of those who had action or got.
Mhm.
They received a letter from the SEC. But explain to me what happened with cloud mining.
Yeah, so essentially it's viewed as a security. Partly this is because the no the person that is doing the investment into the cloud mining contract does not own the hardware. And there are ways now, in 2020, where companies are able to adjust for that. Up in New York, there is CoinMint, who is saying if you're an accredited investor, you can buy cloud mining contracts. So that's how they skirt around that.
Yeah.
And then the other piece is by ensuring, sometimes companies or hosting providers will do a deal where they'll say, I'll buy the equipment on your behalf, you will own it, and you will just pay me a maintenance fee plus the cost of, operating this device.
Got it.
Um,
Got it. All right. So I think that when people enter into this contract, they expect some return on their investment.
yes,
And there lies kind of some of the problems. So
correct.
interesting. So here in North America, cloud mining isn't that popular, or it needed to be restructured to allow
Restructured a bit.
accredited investors to participate.
So it still happens today. I mean, of course, it happens today. But generally, the local states, as well as the SEC, have cracked down on it heavily. So you have to be incredibly careful. And I don't recommend cloud mining. Most of the OGs in the space won't recommend it, simply because you're paying way too much overhead,
Mhm.
and thus, it's not as profitable for you as just buying the equipment yourself and running it.
Got it. And when did you start in the space? I forgot to ask you that.
2009.
Wow. I mean, that's
Yeah.
incredible. So, I mean, how did you arrive at the kind of all of this in 2009? I mean, what brought you here?
So the white paper was dropped into an IRC chat group that I was in at the time, and everyone was very excited about Bitcoin. I didn't really get that excited about it because I just didn't understand it. I was 17 turning 18 at the time. Didn't really make a lot of sense to me. What really excited me, however, was that mining piece, specifically because a bunch of my friends and I got together when the first node dropped, and we were mining and we were competing for high scores. And that's what it was to us. It was like a little game. And every step of the way, we could make little tweaks to our devices. So I could like overclock my computer memory and I could get more hash rate. And that is kind of addictive in the same way that high scores are addictive. We compete. Um, and yeah, then my friends, eventually we reached the limit for what we could do with just tweaking, until one of my friends dove into the code, made his own optimized version, and he came out 30% ahead of us. And then he wouldn't share with anyone. And that got me really, really angry. So he was up here lauding around saying, oh, look what I can do. And I was like, man, you know what? This really bugs me. I'm just going to go do it myself and beat him.
Oh,
Um,
so
and
have you been mining continuously since then, or did you stop and change direction, or when you couldn't mine with a CPU anymore, it just you lost interest? I mean, that's an incredible story.
no, I've been mining steadily, not just Bitcoin. So I mined Bitcoin from roughly 2009 to 2014. And I've dipped in between, between the years, but mostly it's as a hobby. And then for other coins, definitely. So my strategy for myself as a developer is usually get in really, really early because I'm writing base software. And then I've operated my own farm that was quite substantial back in 2017, which was a lot of fun. But put a
Incredible.
lot of that
Yeah.
behind me.
That's really an incredible story. How does the event in May, the halving event for Bitcoin, affect mining?
It really doesn't. It changes
Interesting.
your assumptions.
Okay.
And now that we're behind the halving, we can talk about this much in much more depth because before halving, everyone was panicking. News and media was saying that it would be miner capitulation, meaning miners would just stop contributing hash power. They would sell their rigs because they were unprofitable. So all the halving does is it does cut your rewards in half, but at the same time, you expect the value of Bitcoin to go up. And what we found happening is miners have actually started doubling down on hash power. They're deploying more. Part of this is due to the rainy season in China. Part of it's also just due to the profitability right now. And miners aren't disappearing anywhere. And there are other reasons for that as well. Partly it's due to all of the traditional backers coming into Bitcoin mining now, and a lot of your high level institutions in mining now,
How are
which
you arriving at those conclusions? Are you able to see the increased contribution to hash?
mhm, you are.
That's so
It's
that's
public information.
public
So any block
information.
explorer will show you that.
Interesting. And then you can see also the reward for mining cut in half. That's essentially
Correct.
in the code as well.
Correct.
And is this proof of work model to you important? Because I've
It
seen,
is.
so it is fundamentally important. You don't
Yeah.
think that proof of stake models or DPoS or other things are um, like kind of innovations on proof of work?
So I lecture a lot about this, and I always say that, your consensus algorithm, so proof of work is a consensus algorithm, proof of stake is a consensus algorithm, etc. I always say that your consensus algorithm is just a small factor in the ecosystem for your coin. So for Bitcoin, its ethos is so deeply rooted in proof of work, meaning you have a network, an ecosystem of manufacturers, brokers, pools, and miners themselves that have literally built up businesses and careers around proof of work. And that system is working. That system is efficient. It does prevent a lot of malicious actors. And now, the dreaded attack of proof of work systems is the 51% attack,
Yeah.
meaning that someone with a majority hash power could attack the network and reverse the chain or do whatever they want with it. Well, that doesn't happen anymore. It simply doesn't happen because anyone who does control a majority of the hash power does not want to harm their investment. So if a 51% attack happens, all of a sudden the price crashes, people panic, exchanges, start potentially shutting down Bitcoin transactions. No one wants that. And so someone is, logically now, someone who has a majority hash power wants to protect the network, wants to ensure that they are getting the most return on their money. That is the beauty of the proof of work system.
Got it. And I may be way off here. You touched on a point regarding overclocking back in the days when you were mining and someone had a competitive edge because they were able to tweak their rig or CPU and gain that through code potentially.
Mhm.
Was there a change in the Bitcoin code to prevent this from occurring?
No. So for Bitcoin specifically, there's been some optimizations around the history. What the big one that everyone knows about is ASIC boost, which isn't necessarily overclocking. What it means is that, in layman's terms, you can get 4 hashes for the power spent for one. That's like sort of the rough math behind it. Sometimes it's one for 3. But That was, kept kind of a trade secret between KNC Miner, Canaan, and Bitmain, very, very secret for almost 3 to 4 years. And what was happening was this was enabled in devices. It was a little flag that the the manufacturers could benefit from it, but when they sold to customers, they could not benefit from it. And so it was how manufacturers could get a competitive edge. Someone found this in the source code, leaked it, and it started a lot of uprising and a lot of anger because miners felt taken advantage of. It's
Well,
the equivalent of
Kristy-Leigh, how could the manufacturer benefit from ASIC boost, but the buyer of the equipment couldn't? Are you saying that the manufacturer ran the equipment before they sent it to
not all.
installation?
So yes, but not always,
All right.
especially nowadays.
Why would they do that?
So manufacturers mine as well.
Uh,
It is, like I said, it's a very profitable business. Bitmain has a huge mining operation of their own as well. And so this was partly why they were doing that back then. And so as a manufacturer,
Bitmain would make, hundreds of thousands of ASICs, run them, and then send them out as a batch.
kind of, yeah, they'll
Okay.
make hundreds of thousands of ASICs,
Right.
and then they'll put, part of them in their data center, and then they will send some of them to customers.
Interesting.
But if you want to get a competitive advantage over the rest of the network, how do you do that? Well, ASIC boost was one way, custom firmware is another way, overclocking is another way. There's all these little, efficiency gains you can get to get an advantage over your friends, your peers in the network. And that is part of the proof of work model, constantly innovating.
Very interesting. Tell me a little bit about the evolution of ASICs. Because when I started mining, we had the S9 and it was getting like 13 and a half terahash per second. And I think each one was using about 1400 watts per ASIC.
Mm-hmm.
At the halving, I understand that ASIC is a bit antiquated and there's just better tech now. So over a 4-year time period, what do we have now as options?
There is a lot better tech. So part of it is, in the efficiency piece, how many terahashes you have per watts you expend. And so right now we're sitting at about 100 to 125 terahash.
Wow.
For anywhere from 2,500 watts up to 3,100 watts, which is quite efficient. Roughly it's 37 watts per terahash, but the developers in the space, like the mining developers with custom firmware, have managed to drop that sometimes down to 34 watts. The equivalent, for S9s, it's 75 watts per terahash, usually 90 watts per terahash.
Wow.
Now, that being said, S9s are still profitable.
Really?
They've been deployed in huge amounts across China, across the country of Georgia, across places in Kazakhstan. So as long as you have under 3.5 cent electricity, it is profitable to mine with an S9. So this equipment actually didn't disappear from circulation. It just went to other regions where the electricity cost is much, much lower to hash out its days.
But I think we're leaving out one other metric, and that's the price of Bitcoin. Because even, at the price it is now, let's say 9,000, 9,100, you're saying if you can mine with an S9 at power cost at 3.5 cents a kilowatt or less, you can run S9s right now at the current price of Bitcoin.
Correct.
Does that put a floor in on the price of Bitcoin?
Kind of, there is a floor to what is profitable.
Yep.
Now, miners don't just turn their machines off when Bitcoin drops to an unprofitable value. Mm-hmm. Partly that is because they know the price will go down and it will go up. Miners will hold. They're smarter than they were, 7 to 8 years ago when mining was becoming a thing. And part of this is also that most of the mining infrastructure, I would say today, is more institutional, meaning you've got folks that are investing in Bitcoin for the long-term gains. So I'm not sure of the numbers off the top of my head, but roughly the floor for S9s, if I recall, was 8,800 to 8,900. So they're teetering there.
Yep.
But you've also got to look at it from the miner's point of view. If I have hundreds of thousands of these units, or even 10,000 units of S9s, would I want to recycle them and maybe get $3 to $5 per machine back? Or would I want to just deploy them where there's really cheap electricity and get a steady supply of Bitcoin, which I can then either sell or hold until the price is very profitable? The return on your investment, you know, going the second route is much, much higher.
Yep. Yep. All right. So I love where we've gone, and I appreciate you staying kind of above the technical space that you could have gone to. Tell me what's wrong with Bitcoin. Why does
From
it need
my
to be
vantage,
improved? Why does it need to be improved upon? Why have there been forks? Why are there all this activity? You know, tell me what's wrong with it.
so partly it's due to the to what I would call the layer 1 and layer 2 systems, and using it for anything other than just basic transactions. So we need improvements in privacy. We need improvements in the code base and the documentation in general. We need improvements in developing applications. We need improvements in all of the things that sit above mining. And you know, you have companies like Jack's company now, Square Crypto, dedicated to improving this. You have, you know, the folks at Lightning Labs dedicated to improving this, Blockstream dedicated to improving it. So you've got all these different companies that are working on improving the higher layers of value of Bitcoin. So Bitcoin right now, it's really just money, and that's great. That's all it's set out to be, but it could be better money from a developer's point of view. Could be easier to use.
Got it. You know, because I've said this before, and you know, most recently, super red pilled that Bitcoin's use case is to hold it as money.
Mhm.
You may not agree, or you may agree with that. These things that go beyond that concept or use case, are they necessary?
Not for Bitcoin, but they are necessary for other chains and other cryptocurrencies. So not every cryptocurrency sets out to be, you know, a replacement to Bitcoin or another form of money.
Right.
Sometimes it sets out to be a utility, to be, you know, a representation of some other physical good in the world. But for Bitcoin's case, I think that a lot can be done to be more efficient money and to be more user-friendly money. And now that we have 10 years of history behind us, people with all of their knowledge are now going, okay, here's some of the things we can improve upon. You know, Jack Mellor's, what he's done with the Lightning Network, specifically being able to, you know, pay your banking, pay your credit card statements or pay an invoice with Bitcoin without ever needing to touch, you know, the Bitcoin infrastructure as an end user. That is game changing for the space. That is the kind of innovation we need, where we're closing the gap between the Bitcoin holders and the Bitcoin users and average Joe.
Yep.
And Bitcoin should be no different, in my opinion, to using a credit card today or to using a, you know, a cash or any other form of money from a user perspective.
But how is that the Project Strike? I
Mhm.
think it's in beta right now.
Mhm.
How has Jack overcome the transaction, the transaction argument that Bitcoin can only process 7 transactions a second or something like that?
So transactions per second are a meaningless metric. I will say that right out the gate, it's a
Why?
meaningless metric.
Everyone says Visa does this and MasterCard does this.
So
I mean, 7 transactions per second. Bitcoin is
as
a slow dinosaur.
So Visa can do up to 3,000 transactions per second. Yes, that is called burst transaction processing. They never operate at that day to day. It's just if they get, you know, a huge
Surge of use.
surge of use. Yes, they can spike up. You know how they do that? They spin up more servers. That's literally it. It's not some magic to the tech. It's just spin up more servers.
Right.
Bitcoin is very much the same. You know, if there is a surge of use, the theory goes more miners will join the network because the transaction fees they gain from processing a block are much higher, therefore more profitable.
Yeah, and will you do this for me? Is that what's behind the transaction times? So as if the network becomes burdened, how does the algorithm adjust for that to
Mhm.
incent this participation, which would be the contribution of more hash? How does that happen?
So it's all in the difficulty algorithm, right? So the Bitcoin code is designed in a way that on average, every 10 minutes, a block is going to be processed.
Right.
And now you have variations in that. Sometimes it's 9 minutes, sometimes it's 11, because it's not fixed. And what happens is your difficulty will increase or decrease based upon the participation in the network. So the more miners that are on the network, the difficulty will increase to ensure that you don't burn through your whole issuance of Bitcoin. So you don't want, all 21 million Bitcoins to be mined in the first 5 years. You want it to be spread out across many, many, many years, which I think it's 2150 is when the last Bitcoin will be mined. So we're a bit out of the way yet.
So,
And
I'm
yeah,
sorry, keep going, keep going.
and so your difficulty is what helps keep the network in check and ensure that, someone who's just deployed 300,000 units to the network, and so maybe they're 5% of the network, is going to increase the difficulty and their rewards are going to be in level with, the rest of the network to some degree. Um, and, your going back to the transactions per second piece, really, this is just a metric based upon um, the literally how many transactions are stuffed in a block divided by that 10-minute time. But it is a meaningless metric because it's not really rooted in anything. You know, we are now working on ways with the Bitcoin block where we're able to fit in more transactions or where we're more efficient with transactions. We've got layer 2 networks where, things like buying a coffee or buying a book don't necessarily need to be on the main chain immediately. So the theory goes. So you offload it for integration into the main chain at a later time. Whereas your main transactions, like banking transactions or things over the value of $1,000, do need to be on the main chain to prevent any kind of reversal or to prevent, to preserve the immutability of that transaction.
Do you
So
lose some security as you start to do kind of these light or off-chain transactions?
you do, and Lightning Labs is working on ways, to ensure that the security is there. So because you're no longer tied to the proof of work system, it isn't as immutable as Bitcoin itself is. But how Lightning deems itself to work is that you're just offloading it for a little bit until it's more efficient to put it back into the main Bitcoin network. And they even say, this is only for smaller transactions. So it's for your coffees and your bagels. It's not for, your retirement or your 401k payouts. It's very small savings.
How bullish are you on this concept that I've thrown out and that you seem to uh, think about as well as of Bitcoin becoming real money? It is
Pretty
today,
bullish.
but you're pretty bullish on it.
Pretty bullish. Now, I will say that I don't think it's going to be adopted by governments in North America,
Hmm.
simply because I think, the US is very stubborn when it comes to adoption of anything they haven't created themselves.
Yep.
I think that the US government will eventually make their own form of cryptocurrency just because it's or the Fed will rather, just because it's a much more efficient uh, monetary instrument
Yep.
versus what we have today. I mean, especially with the pressing COVID cases and, the fears, even though they're unfounded fears, but the fears of money being, a disease aggregator, passing hands,
Right.
why do we even need physical cash anymore? We're already in a credit card era. We're already in the PayPal era. Why not just go that extra mile and do away with cash altogether?
Yep.
And remove. I think the big piece is going to be, where we try and say we want to remove banks from the system. I don't think that ever is going to happen. I
Yeah.
don't think it necessarily needs to happen. I do think that banks need a much more efficient payment system, because today it is an absolute nightmare. It's
I mean,
a mess.
you've brought up fantastic points. I think from the US's perspective, the fact that the US dollar is the world's reserve currency is a status they want to preserve. So if
Mhm.
Bitcoin tries to threaten that in any way, they will push back on that. So I agree with you.
Mhm.
It's really interesting to think about, banking the unbanked. And when you go to second or third world countries, they may not have the infrastructure, the banking infrastructure that we have here, but they have very robust telecommunications and cellular networks.
Mhm.
So when you can transact over cellular and mobile devices, you don't necessarily need to build the banks that we know here in North America, which I think is pretty cool. And
Correct.
that's pretty much happening. Do you feel like that's where real adoption will occur in these countries that are facing extraordinary hyperinflation? They don't have the infrastructure and their wealth's being destroyed. Is that
I
where
do.
Bitcoin could
I do. And
rule?
I'm already seeing it. You know, back in 2013, I did a stint back in Venezuela setting up mining infrastructure. And
Wow.
even today, Bitcoin has a huge foothold there. It's got a foothold in Ukraine, it's got a foothold in Russia. Anywhere where there is concern over, uh, a citizen's assets being taken away from the government, not even necessarily because they've been a bad actor, just because, they live in a very corrupt country. People are going to flock to these other asset classes, just like they flock to gold bars today, or they flock to, money under the mattress today, which is, people are always flocking to different assets, stocks, the same thing. And this is why, even though Bitcoin is, in my view, it's a better money system, better monetary system. The US treats it as a different asset class. It's just like you would stocks, or just like you would some kind of other investment. And that works for the US. And then slowly around the rest of the world, it's going from being another asset class to just a better form of money.
Mm-hmm.
But it's going to, I mean, when we talk about real world adoption, most people are just meaning, peer to peer, business to business. For real world adoption to really occur, you're going to have governments in play. And governments are never going to adopt Bitcoin. It just won't happen. They want to have something that they say has been made for them, that they had a hand in making. They are It's the same way that big Fortune 500 companies work, right? Everyone wants their own system.
Interesting.
So,
Interesting. So back to mining for a second. Is mining profitable? Is it a good
mhm.
business to get into? And why not just buy Bitcoin?
In many cases, people will buy Bitcoin and just hold it. But
Mhm.
part of the advantage of mining is you can get in at profit at periods of low difficulty and mine Bitcoin at a much more, how to say this, you can mine Bitcoin and end up getting more
More
for
efficient.
your capex that you've expended in your opex versus just buying it. Now those periods are brief, so miners, they have to be prepared, right? Because there's often a 3-month wait time between ordering the equipment and getting it deployed. So this isn't something you can just do on the fly. The other part is, it's part of the fun. It is addictive. I can't say that enough. It is very addictive. Your hash rate is your high score. You want to keep increasing your hash rate, and you get real money for getting a high score. I mean, that system is so simple, it's elegant, and it works.
Mhm.
And so that's why folks get into it.
Yeah, game theory is real, and
Mhm.
the most successful businesses in the world deploy these strategies to keep people interested and invested in them. I agree totally. All right, what are some cool things that you're working on or you see right now that are cutting edge? Like what's interesting to you?
So there's a lot of cutting edge improvements in data center infrastructure and immersion for mining, which are going to help translate over to the real world for a lot of our HPC stuff. I'm absolutely obsessed with what Upstream Data has done. So for those who don't know, Upstream Data has created these really cute little boxes that are packed with ASICs, and they deploy them at natural gas providers. And they do this because for natural gas, for the utility owner or the pipe owner, they have two choices. They can either sell out, their utility, and whatever is left over, they can either pump it back into the ground, or often they have to burn it off, so it's wasted. Instead, now through Upstream Data, they can just push it over to Bitcoin mining. I'm obsessed with that. I'm also obsessed with the increase we've seen in the last 2 years of miners partnering up with utility providers. And so what happens is they drop a container or a box full of, ASICs at a site. And whatever excess energy is left over, it goes to mining Bitcoin. The utility provider gets, more profits out of this versus, not being able to sell out their electricity. And it contributes really steady revenues for the utility provider as well. So modeling demand in electricity and in utilities is really difficult. All of a sudden, they can replace periods of not much demand, and ensure that they have a very, very, very steady consumption rate.
I love it. So think in this world that you're looking at, stranded power assets, waste gases that would normally be essentially eliminated or flared, you can turn that into mining power. I share that excitement in that space. What about renewables beyond waste streams? Do you see big solar coming in? Obviously hydro's in, but will it cause a renaissance in renewable energy?
Kind of. Bitcoin is already very renewable. So Bitcoin has been most of the innovation, I would say, around renewable computing today. Huge thing overseas, huge thing. Solar is tricky, but it is definitely something that most Bitcoin miners, or even miners in general, of altcoins as well, dive into. I do think that people are going to keep chasing this renewable energy in cryptocurrency simply because it's actually not due to the raw electricity that they get all the deals. It's all of the taxation benefits they can gain from from local or state taxes. It is all of the benefits they can get from the governments. All of the additional accretive value to using renewable is what is going to push Bitcoin miners towards that. And that is why everyone's pursuing it today. And we're getting better innovation now around storing the electricity for use later through cryptocurrency mining, because there's an obsession now over that.
Yeah, well, explain that to me, because energy storage, how are you looking at that? Because when I hear energy storage, I just think batteries, but that's not.
It kind of is. It's
Okay.
a big battery, right? It's just a giant battery, but we need to make much more efficient batteries. So right now, we've got sort of a cutoff where, you can store for about a month to 2 months. What if you could store for 12 months? What if you could push all of that excess energy in there for 12 months? Miners are obsessed with this because we hate waste. It's the same thing that drives our mentality around mining. We want to squeeze out every efficiency. So right now there's a lot of research and a lot of study over making better infrastructure for storing and harnessing energy.
Love it.
And layer one makes the term Bitcoin battery, which I love. They call themselves, the Bitcoin battery of the world. And I absolutely love that terminology.
Interesting. How far do you think we can push chip development from here, where you've almost got a 10x increase in terahash with like a 2x increase in power, something like that? Where can we go? What do you see 4 years from now? Generation ASICs.
So 4 years from now, I think we're going to start getting into photonics. So there are some preliminary photonic miners out there. Right now, they're pretty expensive because the materials that go into photonics, and for folks who don't know, photonics is essentially using light to do computing calculations versus using electricity. It's pretty cool. And I think we're going to see advancements there. Where
What
for 7
companies
nanometer,
are building these technologies? I'm sorry to interrupt you, but
yeah.
who could I look
So
at that's doing photonics work?
So for photonics work, it's actually a lot of universities that are doing that work. It's a lot in the quantum computing space. It's a
Yep.
lot of the laboratories. There's a few that do it today. You know, there's light computing, which was invested in by Elon and Peter Thiel and a lot of the heavyweight investors that are trying to make really, really efficient optical computers. But right now, I've actually been approached by a lot of the material owners or a lot of the universities in wanting to do a joint partnership to bring photonic miners to market. Now the problem is that they're very fragile systems, so they don't operate too well in the really harsh environments that miners have set up. So there's going to be a barrier to adoption there that has to be accounted for. And in terms of chip development, I mean, we're sitting at roughly 37 watts to 34 watts per terahash. We can dip down for 7 nanometer to 27 watts per terahash before we've reached our, sort of our ceiling or our floor in this case. And then, for 5 nanometer that everyone's pursuing, we're going to start seeing efficiencies of 10 to 15 watts per terahash. And then 3 nanometer is also becoming a really big thing in the space. I think we're going to start seeing a progression away from, not away necessarily, complementary to ASIC devices, meaning we're going to start seeing little Bitcoin chips inside, your phone, inside your smartwatch, inside anything once we hit 3 nanometer, because the potential and possibility is limitless. We're already seeing that. There were already phones out there that can mine cryptocurrency where the manufacturer has gotten involved. I think we're going to start seeing more adoption of that once we hit 3 nanometer.
This is cool. I love that you're so far on the cutting edge of this stuff. You're obviously, you may be the earliest person in the space I've ever spoken to. So you're wearing that
Oh, wow.
hat. I mean, '09 is crazy. This is super cool. I can't thank you enough for spending the time today. I know that I could go on for another hour learning from you about this stuff. Where can people reach out to you if they have any questions or find you on social?
Mm-hmm. So if anyone wants to talk mining, talk tech in general, just talk, hit me up on Twitter at OhGotAGirl.
I love it.
It's the best place to find me.
You're amazing. I look forward to learning more from you in the future, and thanks for dropping this fire.
Thank you so much for having me.
All right.
Pleasure to talk to you. Cheers.
Bye-bye.